and welcome. You're watching Closing Trades on ET now. I'm Anisha Jain, with me Sajay Sharma, and if I don't know I should call it that or not, but the market seems to have flatlined for now. If you look at the intraday chart, 19,800 is where we have made the home for the trading session. It's been 10 points up and down from that range, but hasn't materially moved, so very lackluster. The action seems to have moved in the primary market rather than the secondary market, given the kind of subscription figures we have seen so far. It's small caps which are outperforming the rest of the peers, so small cap index is up a good 1% versus the mid cap, which is pretty much flat, and the rest of the markets as well. Pharma pack is lower. That's of course dragged by Cipla, but separately Lupin and Aurobindo are also on the back foot. What's zooming to all-time high levels are the auto names. So Bajaj Auto, after that big upgrade coming in from Morgan Stanley, almost 1,000 points higher on the target price, has spurred that a rally on that stock, and you're seeing a rub-off of sorts on the likes of TVS and Hero as well. Eicher Motor 2 is sitting at all-time high levels, and what's in a sweet spot today, Ajay, is also the sugar companies, right? Take a look at a Uttam or a Sri Renuka or a EID Parry. All are up anywhere between 5 to 10%.
Actually, if you're a Nifty trader, then you're finding it hard to trade.
Yeah, it's
but then there is a huge market out there which is extremely active. Bank Nifty has come back. Yesterday, Bank Nifty was sulking. Nifty was okay. Today, we are seeing Bank Nifty come back. In fact, the worst hit of the banks, SBI and RBL, pull up the intraday, you would see buying coming in from the lower levels. It's also actually off highs, but RBL Bank is in the red, so in the green. Point is that banks are doing well today. The other point is that now in the PSU pack, people are going after names which have not run up, and OMCs, which are the most inexpensive part of the entire PSU basket, and for reasons, is starting to see some action. Barring Cipla, there are names which are doing very well. Look at how Piramal Pharma has shot up, and many others. So people are going after names which have given good commentary after the earnings in the con calls and have not really done a whole lot. So if you're a stock picker, look at the mid cap, small cap intraday, the index, you will see the massive outperformance coming in as far as the Nifty in particular goes. Kunal Bothra is here with us, and Nuresh should also be joining in. Yes, both of them are there. Nuresh and Kunal, afternoon to both of you. Nifty traders are finding it hard, but the overall volumes also been impacted, or it's just the Nifty part which is looking boring? Nuresh?
Yeah, so if we look at it, it's Nifty which has been boring for a really long time, because some of the names have been boring for multi-years now in terms of price action. So if you, so the new meme which could be that HDFC Bank was at 1,500 in say November of 2020, November of 2021, 2022, as well as 2023. So the stock price has gone nowhere. That's the highest weight in the Nifty. It is the highest weight in the Bank Nifty as well. So if you have 12 to 15% of the Nifty stuck at one place, so how do you expect a much bigger trend? And add to it, we are seeing same bit of sluggishness come up in a Kotak Mahindra Bank, which is similarly placed. And the outperformer, which was ICICI Bank, is also stuck. But at the same time, if you look at it, Nifty 50 equal weight has hit a new all-time high. So it's the same stocks, but the heavyweights are not doing well, but the whole stock-specific moves are even happening in the Nifty. Nifty 500 is just, say, 0.5% away from an all-time high. You have mid-cap and small caps doing well. So it's time to be stock-specific, but we've started seeing the first indications of some recovery coming in the heavyweights. We've seen Reliance take start in the last two sessions. HDFC Bank is coming closer to take a start. So overall, the bias is positive. We could actually see some follow-up action over the next few sessions in the Nifty itself.
Taken, but since you're asking to be stock specific, let me point out some stocks and news as well. Let me start with Honasa Consumer, which is high by 20% now. Of course, the earnings were a bit of a surprise, 27% volume growth, margin expansion, and more importantly, the management commentary held up okay. And then, of course, the brokerage upgrade coming in from Jefferies in the sense of increasing their EPS estimates and the target price marginally, and they're reiterating a buy. The second one, of course, is Cipla, as we highlighted, that's taking it on the chin, 7% lower. So the warning letter is something that the street already knew about. It's the details which have come in incrementally, and that data integrity issue hasn't gone down well with the street, given the fact that this is a very important facility for Cipla as well. Also, watch out for what's happening to Bajaj Auto. Morgan Stanley has actually hiked the target price to 6,229. all the way from 5,449. They're saying all 5 cylinders are firing. There are a lot of new launches which are lined up, and all of that is looking quite impressive for Bajaj Auto as well. But Kunal, let me ask you this question on Bajaj Auto as well as Cipla. What would be your recommendations on the stock if there's any trade at all in these two names?
So I think auto stocks largely, Anisha, have been very bullish. So and we look at the last, I think maybe the new candidates of a breakout. I think it's been Bajaj Auto and Hero MotoCorp, which have done pretty well for themselves. When you look at the price comparison, maybe over the last 1 week or the last 10 days, as well as over the last 1.5 odd month. So I think that's where Bajaj Auto seems to be standing out. It's shown classic signs of outperformance. Even at current levels of 5,900, I believe that the momentum is on its side for the stock, and I believe that's a feature which is quite positive for the stock. Would be bullish on Bajaj Auto even from current levels. Would not be initiating a fresh buy, but I think for traders who've been holding on to the long positions over here, I think for them trying to trail the stop loss to maybe 5,700, 750, and holding the positions could be a lot more better. Cipla on the other hand, so I think yesterday the stock had actually given a breakout of sorts in terms of the charts. Now after today's downtick of 7%, 6% move for Cipla, I would actually wait out for maybe one more day of correction or a follow-through price action on the downside and look out for more of contra opportunities over there. My sense is that the stock is trying to tap back into a key support point. So maybe another couple of percentage points lower from today's closing or where the stock is right now, say 1150 approximately, could be a good zone to buy the stock.
So we are also joined by Sandeep Sabarwal, who's on our show now. Sandeep, afternoon. Sandeep, there's a view in the market that there perhaps could be massive shortage of sugar, and sugar stocks have, started running last few days. Also, the other hand, textile stocks were running last few days as well on news that on a bumper cotton crop could be in the offing, which could, bring the raw material prices lower. Have you tracked any of these commodity news pegs and the impact in the markets to that stocks?
Yeah, the sugar story is strong.
Okay.
It would have been even stronger if the government intervention was not there. Because if you see, global prices today are $750 per ton, and adjusted for duty, actually the landed price, if someone wants to import into India, is almost 80 rupees, while the market price is just around 38 rupees in India. So the prices have got restricted a lot because of export restrictions, etc. But despite that, because of the failure of crops in Karnataka and Maharashtra, the likelihood that there'll be the inventory levels next year without any exports will be lesser than the inventory levels we are starting off now is a realistic possibility, and that is positive for the sugar company. So overall, it looks good. Now, people have to be careful where they play, because you can't be playing all the sugar companies, because Karnataka and Maharashtra-based companies will face significant cane issues as well as production issues, and they might not be able to benefit as much from the uptick in sugar prices as some of the companies in the north, especially in UP.
Selective, but they are favorably positioned, at least as far as some of the sugar companies are concerned. But Sandeep, what about this entire financialization theme? A lot of these, stock market facing companies, whether exchanges like BSE itself or the depositories like CDSL, they're all doing well. And of course, the brokerages as well, Angel One and others as well. What's your take? Would you be, kind of playing this theme in any way?
So I think BSE was unnecessarily subdued for a long time, while it's a duopoly and they should have got their reasonable share along with NSE. Now, some new initiatives have boosted the profitability, and now people are realizing that value should be there. So, but as of now, the valuations have run a bit ahead, but overall long-term story is good. Same is the case with CDSL. Brokerages normally I don't play because it's a very competitive industry, very prone to market shocks. And if the overall markets are doing well and economy is doing well, there are better stocks to play. Some of these stocks have done extraordinarily well, but I tend not to buy most of these stocks.
What about Hunasa then? Yeah, are you getting tempted there? 20% move? Sandeep?
That's also very speculative. If you look at it in terms of what they reported in terms of profit growth and all, on a overall base, given the market cap, it's not anything great. So, and when you do an IPO, etc., post that after fundraising, some improvements, etc., will happen. But longer term, sustainability is going to be a big issue, as we've seen with Nike also. I think sustainability becomes a big issue for companies which are mostly online focused, and then they need to go offline, and then costs increase, etc. So I don't think people should be very excited about it.
Sandeep, did you manage to check out Tata Tech offering and the RHP? There's a lot of view in the market that the discount to KPIT, which is its one of the peers, is quite a lot and may actually land up making money for investors. Would you consider checking it out?
It's very much possible because it's at a discount to most of the comparable companies and at a substantial discount. And given that it's a Tata Group company, as it is, the pedigree is good. My guess is it will list very well. But unfortunately, I think for most of the investors, the oversubscription is going to be so high that the allocations themselves may be so low. So I don't know how much sense it will make.
The first day, right? Will it make sense to buy on the first day for those who couldn't get the allotment?
That depends on the price, na.
The grey market seems to be suggesting around 800 something, 350 is around that.
Yeah, imagine a issue price of 475, 500 and a grey market premium of 350 on day one itself. It'll be still a listing. Let's see how it really pans out. But time now to take a small break on the show. Don't go anywhere. When we come back, we'll discuss a lot more stock ideas. We are joined, of course, Sandeep Sabal is chatting with us along with our panelists on the charts. Sandeep, are you observing the way, Sanjeev Goenka group companies are getting re-rated? Philips Carbon Black, then there is CESC which is moving, RPSG Ventures. Any of the names you like there among those businesses?
Not these, but I think from that group, like KEC International is something which we own. That company did well, has gone through a phase of turmoil related to lower margins, higher debt levels, etc. But now I think seems to be on a turnaround path. So I think on corrections and on weak days of weakness, I think that could be something which is interesting.
International, of course, the numbers have been doing very well. But the unheard of, or I'll say not very often discussed names have started to do well. Kunal, Philips Carbon and RPSG Ventures, that is more of a holding company though, but look at how Philips is also doing well. Anything on the charts which look better to you among these two names?
Yeah, I think Philips Carbon is something which I do track. In fact, Ajay, the NSE code, for the stock where it started to get into a lot of volatility. So there was a phase when the stock moved up to 210, came down towards 190, 195, and then multiple attempts towards that 210 odd mark. The stock failed to cross over those levels. I think it's just last week or the week prior to that is where the stock has started to break out of the 210 levels for itself, and I think from there it's moved up strength after strength. It's now gone to those 250 plus levels. So it looks very attractive as a chart. The setup has been quite attractive, except for that minor phase of a bit of a volatility.
Have you on a very bad line, Kunal. We'll try and repatch that as well. But for now, that's the verdict coming in on some of these Sanjeev Goenka companies. What else is happening in the market? Well, it's HPCL, which has actually moved up in the last few minutes. And this is something that we picked up from agencies as well, that India is planning to ask ONGC to consider rights issue to fund HPCL. It's looking at various options to fund HPCL energy transition plans. And one of the ways probably to do it is asking ONGC to consider launching rights issue to indirectly fund HPCL plans, and they're also looking at providing some sort of soft loan to HPCL, and that's the reason that stock has surged quite a bit as well. Naresh, your view on HPCL?
So we are seeing the whole basket do well. BPCL is at a new multi-month high. HPCL is coming almost closer to a 2 to 3 year high. So the last high for the last almost 3 years is around that 340, 350 mark. At 320, the stock is setting up for a major breakout in the long term. Could pause here, but the stock is pretty positive. Same as with BPCL. The stock has hit almost a 1.5 year high above this 405 mark. So structurally, the trends seem to be shifting towards a long-term breakout for the whole basket of BPCL, HPCL, and IOC.
Enough, but insurance companies are also in focus, and I'm not sure of exactly what the pair trade was, Sandeep, or it was just coincidence. We saw that last week when that RBI circular had come. Since then, the banking names were on the back foot, banking and NBFCs alike, but insurance companies were doing well. And then, of course, there were reports of, how the entire motor insurance basket is expected to increase. So we had New India Assurance and GIC run up, etc. Life insurance is also doing okay. What's your view on insurance companies? Would you just completely stay away, or there is merit in looking at some of these names?
I have invested in the past, but then with some profits we have exited because the performance of these companies in general have been subpar and have not been able to achieve the kind of growth rate which one thought should come as insurance penetration, etc., increases. And the results, etc., have been and growth rates have been very erratic across the board, both in the general insurance and life insurance space. So right now, I'm not holding any of these and unlikely to buy in the near term.
Any of these insurance companies haven't been, given the better opportunities available in the market right now, maybe not making it to the top list. But what about auto, Sandeep? Quite a bit of momentum today in the two-wheeler space, calling it a one-day move, or structurally you are getting positive?
Doing well, and as we've said in the past, that Bajaj Auto is a good, strong story which should continue to do well. Now, at what price, what valuations people want to buy, that they need to decide. And uh, Hero Moto also has done well lately, but then their performance actually has been erratic in terms of what they say and what actually gets delivered. So that's something they need to monitor. And four-wheelers also, overall story looks good, both like for Tata Motors or M&M or Maruti. I think all of them should do well.
What about Pharma? Would you look at buying this dip on Cipla or any other name? Because today some of the Pharma names are on the back foot.
In Pharma, we own Sun Pharma as a consistent player, which has been doing well over the long run. And Lupin as a turnaround play, as we've seen the performance turnaround, and that turnaround should again continue to play out over the next couple of years. So these are the two stocks we hold, and I think we will continue to hold for some time.
Note, Sandeep, we'll let you go. Appreciate you making time and speaking with us. But since we're talking about the insurance sector, let me take it across to Anurag and try and understand. Anurag, what's this connection with the elections which are underway in terms of state and the general election and the insurance companies?
Insurance regulator IRDA has set a target of insurance for all by 2047. But as per the poll promises by all the political parties, it seems that this target will be achieved much earlier, and maybe by 2027 also. If we see in the recent 5 state assembly election, all the major political parties have announced free health insurance, property insurance. If we check just 5 states, so in Rajasthan, Indian National Congress has announced that health insurance scheme, the Chiranjeevi scheme, they will increase from 25 lakh to 50 lakh. The BJP has announced 40,000 crore of upgradation for health infrastructure. In the state of Chhattisgarh also, Congress has announced free health insurance of to 10 lakh rupees to every family. BJP has also announced for 10 lakh rupees of insurance, health insurance to every family. In Madhya Pradesh, Indian National Congress has announced 25 lakh rupees of health insurance. On the other side, BJP has announced Ayushman card, a free treatment of 5 lakh rupees for 2 crores. Similarly, in Telangana, Mizoram, so in all the states, the political parties, both the major political parties has announced health insurance coverage up to 10 lakh, 25 lakh. So seeing this trend in national election, in Lok Sabha election, we are likely to see that in poll manifesto, both the major national parties are likely to announce health insurance scheme for every citizen of the country. And in this regard only, insurance regulator IRDA is coming up with a Bima Vistar product also, which is one in all insurance product, which will have health insurance, life insurance, property insurance included in that in a minimal premium. So the insurance for all, which is a target set up by the IRDA, is likely to be achieved much, much earlier because government, both at state level and central level, are likely to offer more and more insurance coverage to the citizens.
That's an interesting one. Thanks, Anurag, for helping us understand that. So perhaps the election promises that have been made of giving insurance is something that could add a bit of a fillip to some of these insurance companies. But shifting focus, and Naresh, coming to you for this one, I wanted to get a chart check going for Man Infra. That stock has been surging away in the trading session. And the other one I want to talk about is Deepak Nitrite, because the volumes are on the heavier side for that one.
In a consolidation for the last 3-4 months.
Can I go to Kunal?
Yeah. So Man Infra is in a consolidation for the last 3-4 months. Give a breakout above those 2022 highs, above that 130 mark. Consolidated for the last 3-4 months. Today, I post the fundraising announcement. The stock has seen a big gap up. So the trend is there across the whole real estate and infra pack. So Man Infra looks interesting, but on dips, any fade off towards 165, 170 going forward would be a buying opportunity. On Deepak Nitrite, overall the trend is pretty weak and sideways for the last 12 to 18 months. So would be cautious here. Being sideways has seen multiple times it fail around that 2300, 2350 mark. So would wait out and not venture here.
Not in a hurry to venture as far as Deepak Nitrite is concerned. So that's one stock to watch out for. In the last few minutes, we have seen a bit of a perk up on Praj Industries, higher in the trading session. Prudent Corporate is also doing quite well for itself. And then Aditya Birla Retail is also seeing some decent amount of volumes in the trading session. Kunal, would you want to venture a bet on any of these names?
I think Aditya Birla Retail is, fashion retail is something which looks attractive. In fact, Anisha, the stock was absolutely sideways. I remember, I think, right from the end of the September expiry towards the, maybe till yesterday, the stock was absolutely sideways. It was stuck into this 5-point or a 7-pointer band. So 216, 217 as a base, 222, 223 as a resistance for the stock price. So I think it comes as a very good and a pleasant surprise that the stock is starting off the end of the the current series on a slight optimistic note. And we've seen historically that whenever the stock has the tendency of moving at the end of an expiry week and the start of a fresh expiry, it tends to have more legs. Now, after today's price volume breakout, I would look out for first targets on the upside, which is around 235, 236 for ABFRL. This is also coinciding with the previous highs of the previous month for the stock price. So I would be bullish on the stock. Now, even in this kind of a momentum-less market, I think this could be a one stock which traders can bet even from current levels.
Take the closing trades as well from our chartist. Naresh, what's the closing idea?
So that would be a buy on ONGC with a strict stop loss below 189. We are seeing good momentum across the PSE space. This is closer to the short-term supports.
Yeah, and I'm guessing ONGC is also on that news flow that we just told you about, that it could be used as one of the vehicles to fund the plans for HPCL. So not sure of exactly how interested the investors will be on that one. But Kunal, what about you? What's the closing trade?
So, since last couple of days, Nisha, I've been highlighting Hero MotoCorp as a positional trade as well as an opening trade, for example, today morning also. So I would want to hold on to that. My sense is that the auto stocks breakout is extremely strong and they should have much more legs on the upside. So hold on Hero MotoCorp.
Okay, hold on to the gains that you have had so far in Hero MotoCorp, but time now to slip into a very short break. Don't go anywhere.
So let's also talk about some other stocks which are doing pretty well today. Ceylon Oil Exploration, they have announced a merger with a company. It's a debt-free company in the business of gas infrastructure. And there's also a management change which has happened there, but the stock has broken out clearly. But is this durable? Kunal, this stock, always kind of goes up and then comes down. Many times in last 10 years, one gets a sense that probably it is breaking out. This time, is it happening for sure or one can't say?
One can't say, Ajay, I would believe, because the stock has not yet broken past about the first hurdle, which is 650 mark. This was, I think, in 2015 or 2014 that the stock had taken a major resistance. The other reason to say that is because the volumes in this last 2-3 months so far is comparatively less than the volumes in the previous 3-4 months for the stock price. Now, even though it's moved up higher, it's on the back of some lesser volumes. So unless we see a higher volume breakout for the stock on a consistent basis spread over 3 months, 6 months period, till then we would probably expect that these could be a bit of one-time upward trending move, and the stock may get into a further leg of correction. So we'll wait out for a mean reversion over here. And today's candlestick also is not very attractive. So making a high of I think 550, 554, and then coming back towards 516 mark, I think indicates that there's more selling pressure on the higher side. So I'd wait out for more correction on the stock.
Point taken. But hold that thought actually. Let me bring on board my colleague Prakash, because he's picking up some interesting data point from his sources, and this is coming in on the market coupling that we were expecting on the power sector, and that was going to impact IEX because for now it has a monopoly, and through market coupling that would really go away. What we now understand from sources, Prakash, is the fact that it's not completely off the table, but it's not going to happen in a hurry.
Yes, and the government viewpoint is similar as it was earlier. Sources are saying that the government is looking at various regulatory aspects before implementing market coupling for power exchanges. In fact, we are also given to understand that the power ministry sources are saying that they have already made it clear that the government is going ahead with the proposal, and it is very unfair to say that the whole plan has been put on hold. In fact, government sources are saying that they will take sufficient time to understand the all legalities and every aspect involved with and before moving ahead, it will take all the discussions and the consultations that has been taking place into account. Other than that, sources are also saying that when it comes to implementation of a deadline for implementation of market coupling of power exchanges, sources are saying that the government is looking at to implement this proposal by next year. So this is the stand that the government has taken since starting. In fact, Power Minister has already stated that, and government is stick to its plan. Sources are also saying that this proposal is win-win for the industry at large, and it is not for individual company or something. In fact, government is saying that it will move ahead with the previous plan, and however, it will take time, and it will be implemented in a due course.
Thanks very much for that, Prakash. Now we have Gurmeet Chadda also joining us from Complete Circle Investments. Gurmeet, here we meet again. Let's start our chat with power only, because my colleague Prakash was talking about power. Gurmeet, you've been writing about power for some time. How are you playing it? Let's do it reverse. Why you like it, we'll discuss later. Tell me, what all do you own in power? Because from legacy companies, wires and cable, transmission towers, financiers, there is a big bouquet out there in power.
Absolutely, Ajay. And as we were discussing in the morning, we are playing it through power generation, which is Tata Power. Also had some exposure to CG Power. Then you are playing it through the transmission space, which is Power Grid, and there's a proxy player to power through a company which is both into it's basically a defense company into explosives. Got the largest order from Coal India for 3,000 crores. Solar industry, the stock has done up quite well. 40% of the revenue comes from Coal India, which again is mainly on power generation. Also, some of the stocks are very, very valued, including Coal India, including NTPC. So that's one way. Then you have the renewable sources to play, which is Praj Industry, that is more on biofuel. And that's more to do with also ethanol as well as the E20 blending and the plans they have on including biogas and eventual integration. The third way is to the financiers, and just see the move in REC and PFC, the way they have run up. I think the most long secular play, because others can be little tactical, is through the ancillaries in this space, which is cables and wires, transformers, insulators. So you look at Polycabs of the world, you look at KI Industries, you look at Voltamp, which is into transformers. I think that's a more, because that's where there is, there will be good operating leverage, balance sheets are much better. Polycab, for example, the margins are now almost 14.5-15%. When we started in IPO, it was in single digit. So the company's really done well and probably will exceed 20,000 crore top line guidance, possibly next year itself.
remember, Anisha, you'll be surprised to know, Polycab at the time of IPO was doing profits of 700 odd crores annually. Now they do the same amount of profits quarterly. Look at where markets are slaves of earnings. Stock prices are the slaves. If earnings are there, nobody can stop stock from becoming a multi-bagger. So that is a view on power. What about financials? You had a very constructive view on a lot of NBFC stock. Did you trim them? Are you still holding them? People have got pretty kind of stirred, regarding NBFCs. But the numbers right now are showing some other picture.
No, so there's some, we have trimmed a little bit because the stocks ran up very quickly. So it's not that we have any, fundamental negative view on it. And, the RBI governor has been talking about potential stress which may come in the unsecured side. So only in NBFCs where the unsecured lending book is higher. And then, the risk weight increased by RBI last week, has some impact on, CAR 1 and capital adequacy, which can have a very short-term marginal impact. I don't see anything structural. In fact, the stronger ones will get differentiated now. I think the bigger impact will come on the fintech lenders, some bit more on the even on the unlisted side. But stronger names like Poonawalla has corrected almost 20-25% from 450 levels. Bajaj has corrected more than 15% from top level. Chola, after a good run up, has seen some consolidation, and these are very richly valued. It's not that they are valued at a book value or below book value. So I think for short term, maybe the trade may shift to larger private banks because there is valuation comfort there. You have not seen HDFC at 2.2 book value for a long time. SBI is below almost 1 book value, hasn't done well at all. Some of the tier 2 banks, Federal Bank has the IPO now of its subsidiary coming up, which is FedFina, another bank which is showing good turnaround. So I think maybe for the short term, the focus may shift there, but I don't see anything changing as such. In fact, we'll be buyers in case any large correction happens. And I think one space which is within NBFC we like a lot is affordable housing. So we've been again lucky to get in very early into Home First.
But I just wanted to come back to the point that you guys were talking about in terms of power and power financiers. Take a look at the subscription figures coming in for IREDA. That's seen a subscription of almost 21 times already.
21 times?
Yes, 21 times.
By closing 30-40 times perhaps.
Yeah, because I mean the bulk of it comes in the last 2 to 3 hours, right? So between 3 to 5 is when you will see that bulk of the money coming in, and it's already hit 21 times. There you have it on the screen. Tata Tech, it's been just 1.5, 2 days till now. It's already been subscribed 12 to 13 times, so massive amount of interest here. But your take, Gurmeet, on both of these, IPOs, Tata Tech and IREDA?
Extremely constructive on Tata Tech. I hope and pray, it doesn't get a very stellar listing so that, we can buy more on this. As it is, the IPO allotment will be less. So very constructive. In fact, I was fortunate to visit their site with my colleague Aditya in Pune. Amazing, capabilities they have developed. So, for beginners, they offer, end-to-end value chain on the automotive. So they're starting from concept, design, mechanical, which we call the hard floor model, to software embeddlement, and towards the end of the value chain. KPIT and XZ are more towards the software side. Secondly, they don't compete with OEMs. They help only in integration. So it's a pure service play. So, for example, they will not make autonomous driving, ADAS. They will help OEM integrate with it. As a result, they have a very highest on-site mix. In fact, it's more than KPIT actually. Third, they are capturing data. So these days vehicles have 70, 80 ECUs, electronic control units. And there's so much of data which can get captured, which can then be customized for client experience. So, for example, the tire pressure in high terrain, the heating requirement in winters, the fuel efficiency data. So, going forward, I think they will probably do what probably a Netflix or you subscribe for services in a car. So you take heating when you need heating in winters, for example, which is what BMW started and Merck has started in Europe, right? Huge, very good model. I saw some of the robotic stuff they are doing, live factory monitoring, and they call this as a digital cockpit in terms of what they do. So amazing capabilities, and probably this year we will do 750-800 crores PAT. At the upper end, it's 20,000 crore market cap. So that's what, 25-27 times. So I would just hope that, you get, even if at a 20% premium, I would probably be a buyer on listing.
Right. So that is about the new listings which are taking shape. The numbers are doing the talking. Gurmeet, autos, How are you playing autos? Is it more tilt towards auto ancillary, or you do have some big OEMs as well? Now the streets seem to be re-rating the two-wheeler OEMs, Bajaj, Hero, TVS. All of them are darting ahead. Even Eicher has come back after the pressure it saw from heightened competition talks, etc. How is that represented in your portfolio?
So very, very overweight, and I think that's played out very well for us. Tata Motors has played out very well, beautifully for us. So has M&M, despite the RBL concern. In fact, that's taken over. Numbers are still very good. I think the street is still worried on what they're going to do with the RBL, although it's a very small stake. Two-wheelers, we don't have any OEM as such. We just had a holding company of TVS we bought as a special situation, which was Sundaram Clayton. Because there was a corporate demerger where it got split into three. You got an auto company, a holding company, and a preference share. So it was a tactical play for us. One thing which has really worked out well for us is both Uno Minda and Sandhar. Sandhar now recently last week, it's crossed 500 today, almost 7% up. It's from a one product, one OEM supplier, now it's multi-product, multi-suppliers. Their two-wheeler revenue mix is now 55%. So they're market leaders in your locks and vision systems. They do a very good job on cabins for off-highway vehicles as well as CVs. They do a lot of fabrication work as well. And they're getting into smart locks, which is a very futuristic product, and building a nice EV portfolio. Companies now generated more cash flows in first half of the year than they generated the next year. So that should see improve some debt equity ratios as well as overall return ratios as well. And Minda obviously has been an old favorite. I've seen the journey since 2016, and now suddenly the stock has really started showing decent up move. Another one which we like is Sona BLW. So that's how we are playing this. M&M I think is due. So once the rural side picks up a little more, I think you should. It's still pretty reasonably valued compared to others.
Taken, but since we are talking about the entire auto sector, let me bring on board Shrishti. She's joining in to talk to us about that upgrade that we were discussing on Bajaj Auto from 5,400 thereabouts all the way to 6,200 plus. Shrishti, but what is the thesis?
Well, yes, a very positive note coming in from Morgan Stanley, where they have maintained the overweight rating on this particular counter with a target price of 6,229 rupees. After the recent move in this particular counter, they continue to stay bullish. And what they are highlighting is that the company is doing really great in terms of the demand, because the management is quite surprised with the demand that they have seen for some of the recent launches like Triumph, and the festive season sales has been really good. Other than that, onto the supply chain constraints, they have been working well and looking to expand across categories. So let's dive deep into that. What Morgan Stanley is highlighting is that all the 5 cylinders are firing. First up, the Triumph sales are ramping up better than they expected. The company is ramping up the production and the distribution of the Triumph to 10,000 per month. That's the plan going forward. And they see a strong ramp up of Chetak EV segment as well. There too, the production was a constraint, and going forward, they plan to ramp up to 20,000 per month by the end of Q3. And not just that, they are coming up with new products in the Chetak EV segment. The new model launch of the Chetak is planned next month, so that is something to look forward to. The domestic bikes in the 125cc plus segment, that has done pretty well, not just on a YTD basis, but this festive season as well, that has seen a jump of almost 20% in the sales. Other than that, the three-wheeler business, that has maintained its leadership, market share of over 80%. And the three-wheeler business growing well through its focus on the CNG as well as EVs. And lastly, they are highlighting that the exports is seeing a gradual move in the months, and the export is likely to reach 150 to 160k units per sales in the upcoming months. So all the 5 cylinders are firing for Bajaj Auto, and that's maybe what the investors are liking at this point in time.
Okay, point taken. So that's the view coming in on Bajaj Auto. But Gurmeet, what about the move that we are witnessing today on Honasa Consumer? Unwarranted or long overdue?
I think it was too much pessimism, during the IPO, long threads being written, why portfolio managers are buying. And I think that's why I keep saying that, the new age businesses require different lens. You may ignore it. I mean, and I'm mostly not an investor in some of them, but we should not comment on it. And these businesses have different growth models. I think the numbers were pretty good. It almost doubled, doubled the better improvement on margin, doubled the PAT from 15 to almost 30 crores. In fact, the commentary on launching new products in beauty and personal care in the white space also helped the market. And then there was, brokerage reports, but valuations are still extremely on the higher side. I would prefer to wait it out. But it's not that we don't like any new age business. It's just that you have to, as I said, have different lens for it and have a VC approach. You put 10 ideas and you be mentally prepared that maybe 6, 7, 8 will not go through, but the ones which go through will make up for that. And I think that's the approach needed to play this space. And but there was undue negativity around it. I think some bit of that is now getting reflected.
I do remember seeing all those posts as to why the mutual funds and the portfolio managers have subscribed to this one. Not sure if the verdict is out yet, but at least for today, the move is favorable. In fact, let's listen into what the management had to say, because they are quite confident of at least maintaining that 30% plus kind of growth rate.
Focused on masstige and mass premium categories. And I think as a business and as a house of brand, all our brands play in the mass premium, masstige categories. And this space is expected to grow at almost twice that of the mass segments in the country. I think given that and how the whole online, offline ecosystem is evolving, we are fairly uniquely positioned to capture this evolving opportunity in the beauty and personal care space. If you actually look at our capital efficiencies there, we've continued to maintain our working capital cycle. So I think our focus there will continue. The business, of course, is capital efficient, doesn't require that kind of a cash investments, in terms of how the channels are panning out for us. I think the focus is, clearly on delivering growth and delivering growth which is backed by a profit growth which is faster than top line, given where our margins are, and I think that will solve for itself. Our return ratios will continue to improve.
Sure. Kunal, a couple of these other buzzers as well. Of course, the entire sugar space is excited, but I see EID Parry moving on good amount of volume. So your pick from the sugar pack, and Prudent Corp, that's higher too by around 8 to 9%.
So for the sugar pack, I'll still stick to the larger cap names. So I think Balrampur Chini is something which I do track, very closely. That stock is looking attractive. There are, stronger other moves. I think I was looking at the charts for many of the other sugar names, Andhra Sugar and EID Parry. I think there was a odd move. I think if I'm not wrong, from Praj Industries, which is sugar derivative of that. But I think many of these stocks have started to show signs of good price action. What I like about the chart specifically for many of these names is that many of these stocks are coming out of their seasonal kind of consolidation. So I think that's something to watch out for, because this could probably indicate that it may not be a short-lived trend, but it could short-lived rally, but it could be actually a trend in the making. Balrampur Chini specifically is something which I do track. I think that's a stock which I strongly believe could probably see a further upside. 550 approximately could be a near-term target range for Balrampur Chini. Prudent Corp, which you mentioned, I don't track, so I'll skip that.
Okay, apart from the frontline index, it's HDFC Bank which is making a bit of a move. So just a 0.5% thereabouts, but given the kind of flattish performance we have seen from HDFC Bank, even 0.5% is something that manages to get us excited. But what's really exciting in the market right now is also the real estate pack, right? Gurmeet, how are you playing this entire real estate theme? Is it through building materials, cement names? Is there NCR that you like, or Mumbai, or is it just too expensive and stay away from all of these real estate?
No, not really. If you see, the high-end consumption has really done well. So if you see the luxury watchmakers, you see how the performance of the hotels have been, especially Indian hotels at the higher end. Look at the air travel data as well. So I think the urban affluent seems to be doing pretty well, and that's reflecting even in the real estate numbers. So the affluent units, the luxury units are doing well. So we like DLF. I think what they've demonstrated, they're getting the balance sheet discipline now. Did significant reduction in debt, did 15,000 crore pre-sales last year, guided another 18-20,000, and they have a lot of projects coming up. Command a very premium image in NCR market. The rental portfolio is doing well. It almost accrues 1,500 crores. Office occupancy rates are shaping up pretty okay for them. Some point of time they have a REIT also coming, and some monetization which is due. But I agree with you. The bigger play, as I said, would be more in building material, because that's where you get better return ratios, better balance sheet, etc. So so we like Kajaria, we like Cera in sanitary ware. Cera, for example, 50% sales comes from tier 3 and above. Kajaria again, very big beneficiary of ban on Chinese dumping on morbidites, etc., and moving to gasification of plants. So there's a tailwind supporting it as well, and there's a regulation supporting it. And even some of the cement names, after a long time seeing volume growth there, and you'll see massive consolidation in this space. There are a lot of some small cement companies which are trading below replacement value, other than the larger ones doing well. I think that's where we are focusing more on.
Okay, point taken. In fact, since we're talking about the real estate sector and you talked about NCR region as well, so let me play a bite of the conversation we had with Max Estate Management and talk about what they are making of the market that we are seeing right now. Is it a bubble or is it a long-term trend?
When you look at longer term trajectory over next 5 years, if I only look at what we have acquired, which is 8 million square feet, the commercial portfolio, which today we have got 2 assets fully leased, giving us a rental revenue of 50 to 60 crores. This is going to reach 400 to 450 crores when existing commercial asset is at peak occupancy. So that's from a longer term trajectory. We are already looking at a baseline revenue over 5 years from 110 crores today at Max Estates level to 2,500, 2,700 crores. That's baseline based on what we have acquired today. And on top of it, we will continue to add a couple of million square feet, which will give us requisite growth for the investors beyond that steady state that I just talked about. Sticking to our aspiration of adding 1 plus 1, approximately 2 million square feet raw material in the hopper every year, we are very confident of coming back and announcing to the market new acquisition over next 6 months. We are not eyeing for a large market share. We are eyeing for the indication and the guidance we have given. We are looking at 8 to 12% market share of the relevant target segment, the premium target segment, over next 3 to 5 years.
Okay, so that was the latest coming in from the management of Max Estates. But from the frontline index, Naresh, it's Larsen & Toubro, which is down about 1%, and Infosys, which was showing a bit of a breakout yesterday and at the start of the trading session today, has completely given up its gains. Infosys in a reversal now? Naresh, you'll have to unmute yourself.
Yeah, L&D came back to the highs made in October, and that is where it got a little bit of a resistance. But the overall trend remains positive. I expect 2,900, 2,950 to hold on here. So not really looking at it as a topping out case, but rather a case for consolidation. Infosys, on the other hand, tried to show some momentum yesterday. We are not seeing follow up the next day today. So again, the same trend continues for a lot of heavyweights. We see one bit of say uptick, not a major follow-up next day, but the bias is still positive for Infosys till the time it holds above 1410 levels.
Actually, Gurmeet, we let you go. Thank you so much for making time, but I still have to take the BDSC trades from our technical experts. Kunal?
So I'll go with ABFRL, Nisha, after today's up move. I think it's a good sign of a breakout and a much impending one rather for ABFRL. So it's just a buy. Targets of 236. I would reverse the stop loss since stock is moved up higher to 222 for ABFRL. And Varun Beverages is also the other stock which is looking attractive. The stock is confirmed a breakout yet again on the daily chart, more of a trend breakout. So it's just a buy with a target of 1100, stop loss at 1050.
Okay, so those are the 2 top recommendations coming in. But what about you, Naresh?
So first is a buy on ONGC, a risk reward trade, stop loss at 189, target price of 197. Second is a buy on HDFC Bank, which has been holding positive for the day. Could see some more action. Stop loss at 1512, target price of 1560.
Gentlemen, on that note, we let you go. Thank you so much for taking us through the trading session today. And don't be fooled by that flat line that we are witnessing as far as Nifty is concerned. As flat can be 0.01%, but it's beneath the surface where all the action was. So the broader markets were very, very vibrant, and individual stocks, they were the ones that were moving around. Let's start with some of the big gainers then. Of course, Honasa Consumer or Mamaearth deserves mention with a 20% gain. Man Infra was higher by 12%. The entire sugar pack, EID Parry, Sri Renuka, Dwarikesh Sugar and all of these names were higher in the trading session. Some other names like Praj Industries and then of course HPCL as well, on account of that news flow that they might be getting some soft loan from the government. Plus ONGC could be helping them to fund it as well. So that's the reason HPCL moved higher. You also have Prudent Corp, Aditya Birla Retail, Senco Gold, Suntech Realty, Genus Power, Yes Bank. All of these stocks managed to hold up okay. On the losing side, Tube Investments was seeing some profit booking after that rally yesterday. Rate gain because there was some fresh supply of shares that came in, so that stock was lower. Cipla took it really on the chin today, started with a cut of around 0.5% to 1%, but during the trading session, additional selling pressure coming in, 8% cut on Cipla on account of that data integrity warning letter which has come in. Home First Finance also saw that large trade happening, so on account of that 4% cut coming in for Home First as well. But wrapping up the day with the advance decline ratio still favoring the advances because the broader markets did well. Autos held up, real estate held up, sugar held up, but it was Pharma which was on the back foot. But with that, a wrap on this edition of the show. Thank you so much for being with us. We'll see you tomorrow morning.